Welcome to Real Estate Investing for Women. On this show, you will learn how to create wealth through real estate the blissful way. That means with very little stress and very little time. We talk about strategies, mindset, heart set, money smarts, resources, and so much more to ensure you're able to create the success you most deeply desire. Now, here's your host, Moneeka Sawyer.
Today, I am so excited to welcome to the show Krystle and Kenny. Krystle Moore is the founder of Pacific Shore Capital and San Diego's leading expert in commercial financing and real estate investing. She began her career at the age of 19, and now with over 18 years of experience, Krystle has funded over $18 billion, funded over $1 billion in loans, helping over 1,000 clients with their commercial and multifamily financing needs. Between managing over 1,000 units, rehabbing, and designing countless properties, she is committed to sharing her immense knowledge and industry expertise with her clients. Kenny Simpson, head of the Simpson team, is San Diego's premier residential financier and real estate investor. He's worked with over 1,000 clients on 1 to 4 unit financing, helping them shift their mindset and have the confidence about qualifying for a loan, whether for a primary residence or for investment properties. He is the co-host of San Diego's most popular real estate podcast, Get in the Cash Flow Game with KK, with K and K. Kenny has over 17 years in the business, including his own investment and management experience, having managed over 1,000 units, helping rehab and design countless properties. Hey there, guys. Welcome to the show.
Thanks so much for having us.
Thank you. Great intro.
Yeah. Well written.
Yeah, it's a lot. Yeah.
You guys, I'm really excited to have you on the show because I think it's important. I want my ladies to really hear this, is that it's important to have mentors in the industry that have been here through the cycles, right? So you guys went through the 2008, 2009 crash, right? So many people that are in real estate today got in the last 10 to 12 years. They got in like at the bottom when things were really, really easy to get into. They didn't have to ride that wave. And that wave was a rough one, And so I love that you guys have been in the industry long enough to kind of know things can go bad and what to do when that happens. So congratulations on your success around that. And I'm so excited to be having you chat with my ladies about financing.
Thank you so much. I'm excited too. I'm very passionate about women being involved in their financial future. So I was really honored to be able to be on the show today.
Yeah.
Yes. Likewise.
And Kenny, thank you so much for that. I think what's really important for us to all understand is that us as women, we need to be in control of our financial future. Absolutely. We're not taught that as younger women, usually. We have to kind of figure that out ourselves. And then our allies, the men in our lives, are a really, really important part of that success. And so, Kenny, I super appreciate your support of our ladies. My husband's the same way, right? So my husband's not as involved in my business, though. He's good support staff, but
That's good.
So this is really, really great. Hey guys, could you talk a little bit kind of high level on how you got into the industry and what your story is?
Sure. Yeah. So I got started, like you mentioned, when I was 19. I actually was taking some like community college classes and things. And quite frankly, my family just couldn't afford to pay for college or anything like that. So it was all on me. And so as a young 19-year-old, I thought, why am I paying to go to school? Like I should get paid to do this. So I needed to pay my bills. My mom worked as a rep at Washington Mutual at the time. I was begging her to just give me an in, just call somebody and just let them interview me. That's all I'm asking for. Not even, don't give me a handout, but just give me an opportunity. So when she felt like I wouldn't embarrass her, she finally gave me a couple of recommendations. I interviewed and I did residential for about 4 months, but I always wanted to do commercial. So I just did what they tell you to do. It's like, tell everybody, tell your friends, tell your family, eventually someone's going to give you a shot. So my first client I met at the gym, I was super into fitness at the time. And honestly, I winged it from the very beginning. I had no idea what I was doing. He kind of knew that anyways. So that's how I got my first deal. And then from there, it was a good time. We were on the upswing, 2003. So it was like his partners referred me to their partners and his partners' partners. And it kind of just was like a snowball effect from there.
Mm-hmm. Why were you so interested in commercial rather than residential?
I think when you're considering if you want to do residential real estate or commercial, the thing for me is I thought to myself, I'm not as kind of the emotional, touchy-feely, first-time home buyer, emotional kind of thought. I wanted to work with business people. So on the commercial real estate side, even when you're getting a commercial loan, it's a business loan. We assume that you're a sophisticated business person. That's why we don't have RESPA and all these other crazy things that came as a result of the 2008 financial crash.
Mm-hmm.
So I liked working with more sophisticated investors, generating wealth for people, figuring out how to get more cash flow like that. That's really kind of what lights me up. So that's why I went that direction.
Interesting. Thanks for that. And Kenny, how did you get started?
Yeah, kind of similar. Was in college paying for my own way too. And honestly, a lot of friends in 2002 and 3, they started making a lot of money around me in real estate. And I'm sitting there going to college day after day. And honestly, I just kind of woke up one day and I said, I'm just kind of over this. And I just want to go work and make money. I always wanted to be in real estate, not really sure which aspect. So a friend reached out and said, hey, you want to come join my team? And I started off in the business as a loan processor, which honestly is really good.
Mm-hmm.
And gave me a lot of well-rounded skills and really learned the background. And then quickly, we ended up starting a branch. And then honestly, 18 years, 17 years later, I'm here as a mortgage broker and just, enjoying what I do. So honestly, I just kind of dove in and figured out residential was the way. And I knew I didn't want to sell real estate. I didn't really know I wanted to do financing, but now I'm into it. I really enjoy it.
Yeah, I was a mortgage broker for years and it was so much fun. Like the puzzle of a loan package, right? Whether it's commercial or residential, it's like a puzzle, right? Putting the whole thing together, getting exactly the right product for the right person, right? And the right property, right? There's so many moving parts. I love that you started as a processor because I think so much of the time the processors don't really understand what us mortgage people go through on the front end, right? We're trying to put together a puzzle. They're trying to get it to underwriting. So they're the middleman. They're such a key part to our success. And so many of them don't really understand what it takes on both of those sides, the front end and the real back end, right?
Yeah,
So I think that's amazing that you did that. What an asset for you, because you understand them then, right?
Yeah, for sure. Yeah. I mean, the business has really come a long way with technology, and lenders have really tried to figure out how to make the process as easy as possible. And so I think as we've gotten further away from 08 and 9, Fannie and Freddie and a lot of the banks have eased up on some stuff and got a little bit more realistic. Obviously, the pendulum swung way too far and then way too far the other way. So we're definitely getting some normalcy. And so it's helpful because, getting a loan sometimes cannot be fun. As we all know, it's paperwork and it's a stressful time when you're buying a house. So we try to make it easy as possible,
Yeah. I love that. So you guys, you wanted to talk today about multifamily properties, which is a topic that my audience is very, very interested in. So let's start by talking about why to get started in multifamily to supplement your income, and how does that work?
For me, the thing is, I think we're all taught in school to just, get your education and go out and get a good job. And so, that may have worked a long time ago, but the truth of the matter is most of us, especially if you're living in a major metro, we're in San Diego. It's not cheap to be here. So, having a W-2 job your whole life is not going to work out really well for you when it comes time to retire. There's just, even if you contribute the max to your 401k and things like this. So we really backed in to see what kind of lifestyle we wanted to have. And I had the benefit of seeing that since I was 19. I got to see tax returns. I worked with a lot of real estate investors that owned multifamily. family. And honestly, it seems like they just didn't really have to work and they were always on vacation, and their idea of work was driving by the properties or having lunch with brokers, things like that. And it just seemed so fun to me. I'm like, I'd love to fill my days doing this. And then I started realizing the kind of cash flow that they were getting, because it really doesn't look like that on tax returns. That's the benefit of being a real estate investor, is that a lot of real estate investors don't pay taxes. They provide housing, and in exchange for that, they get a lot of tax benefits. So I find that multifamily is the absolute safest investment vehicle that has the most tax benefits. And that is why I truly believe in owning multifamily properties.
Nice. I'd like to add something interesting that really got shown a light on in my own life that's very, very similar to what you just said, Krystle. And first of all, Krystle, just congratulations for starting at 19, both of you guys. Like, the younger we start, the more opportunities we have to create huge amounts of wealth and a huge legacy, right? So just amazing. Those of you ladies that are listening that are like 19, 18, 20, you need to get started. Even later in life, there's many opportunities, right? I always say there's a million ways to make $1 million in real estate, but the sooner you get started, the easier it is. So
Yes.
Congratulations on you guys, and anybody who's listening that's really young, get started. It's important. But the thing that I wanted to comment, excuse me, the thing that I wanted to comment on is my husband and I just bought another property, primary residence. And I was really, really dismayed at what we could afford. And there was a couple of things that I really noticed this time that I want to highlight to my ladies right now. Because of the write-offs and the depreciation and all of that stuff in real estate, looks like you're making no income. Plus you get to do a ton more write-offs. So actually for me, I'm showing huge losses, right? Yay, that means we pay less taxes. What that also means is that because of me, we can't qualify for loans. So my husband does all the loans. This is kind of how we've distributed it. But what's also really interesting about this is when we were very, very young, so our first house was $200,000. Our next house 5 years later was $700,000. Our next house was $750,000. What's interesting is that even now, all we qualify for is $750,000 to $800,000. Why? Because my husband's income, my husband's a superstar at work. So he gets very, very nice raises, 3 to 6% raises each year. Think about that, 3 to 6%. Have property values gone up faster than 3 to 6%?
Easily, hands down.
Right? So what do we qualify for? It's still about the same number of dollars, because he's only been going up 3 to 6%. Now we could do a little bit more if we actually dig into the numbers. There is stuff because of losses and stuff like that shows up on the tax returns. That's not about me, right? But just everybody who's listening, just take that in. It's been 25 years he and I have been together buying real estate. We still qualify for the same property value today almost that we did 20 years ago. So if you are going to rely simply on your W-2 income, are you going to be able to really grow your wealth, right? We have to buy in bad neighborhoods today to qualify for our loans. We didn't have to used to do that, right? And you hope that in life you're improving your lot, right? You're improving the neighborhood, you're improving the house size, you're improving, right? Why are we not able to do that? So there's a lot more conversation around that. And I don't want to say that that's the end of the story, but it was such an interesting thing for me to notice, like, wow, how is this even possible? We've been in the business for 25 years. How is this possible? So we made some adjustments. We did some different things, stop writing off things, stop taking losses, or some other things that we can do. But if you're just relying on your W-2 to plan your future, that's kind of what you're in store for. It does not keep up with inflation. It does not keep up with house prices. So cost of living is going up. Your income will not keep up. So it's super, super important to find ways to supplement that income. Does that make sense?
That is such a good point. I mean, we've always been commission based, so we've never had that idea, but just even thinking about a W-2 job, that's what we're trained to do. That's the safety that we run to. And the safety is not winning in today's environment.
Well, in any environment, it's really never won. If you look at W-2 versus housing prices, if you look over time, we're not able to keep up. People have to move to cheaper areas in order to afford the homes that they like, right? Or you need to be a dual income. You've got to do something other than being a W-2 employee in order to keep up with housing prices. So there's some really, really interesting things there. First, that's like your cost of living, right? But the other thing that tells us is real estate is a really, really good investment because it is increasing significantly faster than inflation and our incomes, right? That's not true in every single market, right? But if you do your homework and you pick the right markets, that is true, right? So it's important, ladies, it's very, very important. I've never said this on the show. It's important to understand where you're headed if you're not going to invest in real estate, if you're not going to create those other streams of income and cash flow.
Yeah, I have a good example for your story on that, because you do bring up a really valid point. So, because I do residential financing, I get to see kind of, Krystle's different. A lot of her clients might not even have a job. They just might be real estate investors. Mine typically have a job and they're just getting started, or some I just happen to be her clients. But I have a client that worked at Qualcomm, right, for 25 years, did the retirement, did the stock thing, and he basically never bought real estate, bought a house, and the crash came. And he said, you know what? I'm going to go in and I'm going to buy real estate. This is it. This is my time. Mm-hmm. And I remember meeting him. I remember we probably ran into him. It was probably 5-6 years after the crash. He bought all this real estate. He went crazy, worked crazy hours. And I remember sitting down for lunch. He goes, it's crazy, Kenny. I worked 25 years as a W-2 employee for Qualcomm. He did really well, saved, did the retirement. He's a very conservative guy. He's like, I built more wealth in 5 years from real estate and cash flow than I ever done with this job over 25 years. And he realized what he said, I should have started younger.
Yes.
And so to prove your point, that this is why you start younger, start as soon as possible, because what you can do at 5 years or 10 years or 20 years, it's unbelievable.
It really is unbelievable. And I am so grateful that for some reason I figured that out also when I was like in my early 20s, right? So, but you ladies, I know there's a huge amount of my audience that is not in their early 20s, they're in their 40s and 50s. There's many different ways for you to make money in real estate. So if you're not getting started early, it's not the end of the world. It's not the end of the game, but just it is easier. It takes less effort to build that wealth if you start younger, right? There's the compounding, there's inflation, there's appreciation, there's all of those things that really, really aid sort of intuitively and naturally, so you don't have to think about it, right?
And honestly, it really, like you said, just getting started is really the most important part. It doesn't matter how old you are. I mean, we have clients who got started later in life. We have a huge investor we know here now who didn't get started until he was 35. He was a musician playing in bars. He borrowed $3,500 from his broker to buy his first property. He owns over 6,000 units today
by himself.
He's in his late 60s. So from 35 to, let's call it 65, he owns 6,000 units, 100% by himself in San Diego, the most expensive market in the country. So there are stories for every person. So it's not like if you didn't get started in your 20s that, it's over for you.
No.
It's get started at any point in time, and you will definitely exponentially improve your life going forward.
Absolutely. Absolutely. And, like I said, and I've talked about this on the show all the time, we have to, before we pick a strategy, you have to figure out kind of who you are and where you're at. So what is your risk tolerance? What are the things that you're trying to achieve? And part of that has to do with the time frame that you have to achieve your goals, right? So how much time do you want to spend each week and each day, but also how much time do you have? So that's definitely one of the components to think about when you're picking your real estate strategy. So you're not out of time, but more time gives you more opportunities, I think. So Kenny, could you tell us a little bit about actually you just did. You told us all about your story, right?
Yeah.
Yeah. Good. I get distracted. I'm like so excited. Okay, good.
No worries. We got a lot going on.
That was very professional of me. Okay. So what do you look for in an investment property?
So I think for anybody, when they get started, we have this conversation a lot because we do get referred to a lot of first-time home buyers. And then we also get referred to a lot of first-time investment property buyers. And I kind of have the same conversation. I said, why are you buying a house, or why are you buying an investment property? Right. And then I said, you really need to answer that question. And then I tell people a husband and wife should be on the same page. And if you don't have a husband and wife, then you don't have to be on the same page with anybody if it's your own money. And that's the question. Sit down and say why. And then the other question is, what are the goals and what are you looking to do? And like you just said, is what is the plan? Some people are like, I'm looking to, in 5 years, I want to make $5,000 a month and, income. So when you come up with the why and the plan and the goals, then we back into what kind of property do you want to buy? Are you going to buy a single family? Are you going to buy a 4-unit? Are you going to buy a 5+? We always push, if you can, buy the most units as possible, because that's just what we push to. And at the end of the day, if it's your first deal, you might not understand it, but if it's your third deal, you're like, yeah, I should try to buy as many units as possible. So when you're looking for your first real estate investment property, when you answer all those questions, I think it gets easier. But also, like you said, is if you're getting pre-qualified with somebody like me, we kind of back into it. It's how much money do you have, right? Is it just you? Are you bringing other partners? And then we back into, okay, this is basically what you can afford. This is what the gross rents need to be. And this is how we can get you a loan. And Krystle could be a little bit differently because the property has to qualify. So when people say, what are you looking at an investment property? I'm more like, what's your why? What's your game plan? What can you afford? And then from there, then we go, where's the areas you might want to look at? For example, if we're here in San Diego, you might not want to go buy an investment property we have to drive 45 minutes away to every time you have to go somewhere. Maybe you're going to look for something closer. My idea for your first property is, if you can buy it close to you, near you, it's just easier, especially if you're buying it, rehabbing it, and managing it. You want to be close by. So really what I'm looking for is probably not the first question I ask. It's more backing in and getting all those questions answered, all the pre-qualification. And I feel like it makes it so much easier to identify really what you want.
I love that. And that's exactly how I operate and used to work also with my clients. So I absolutely love that. And then Krystle, how about your perspective on that?
So it's very similar to Kenny, but a lot of times when I'm working with new investors, or even people who own a couple of 2 to 4 unit investment properties, and now they want to take the next step, it's really great that Kenny and I actually work together, because people don't know when they're making that crossover to apartments that the property has to qualify. So they come to me and they say, well, I have X amount down and I can get 75% LTV, right? Well, technically, yes, but the property has to support the cash flow. And this is why having your criteria and your goals and having, understanding exactly what you're looking for is so important, because I say to people all the time, you can go buy a 2 to 4 unit property and put 25% down and cash flow negative. So if you don't do your homework up front and you don't understand how to run cash flow and how to, you don't have criteria, you could be in a property that doesn't even cash flow. On apartments, we don't let you do that. So it's very difficult to fail. But at the same time, you might have to come in with a lot more money down than what you anticipated. So the first step for me is really talking to someone and getting qualified. It's not just a broker. A good broker is going to want you to have be in contact with a lender as it is, but you really kind of want to take a handful of deals to your lender and say, hey, what do I qualify for on these deals? So that you can start understanding all of the different terms that we use in multifamily. It's much, much different. Again, we're basically, every building that you look at is a business. I'm underwriting the business. So that business needs to cash flow. And based on that, I can tell you what kind of loan that I can give you. So for most of us, if you don't have a loan, you don't have a deal. So we usually start there. And the pre-qualifying for multifamily is much easier in process than it is for residential. But it's definitely a different way of looking at it if you're used to residential.
Right. And I just want to highlight really, really quickly, sort of summarize for my ladies. I've said this before on the show, but I just want to say it again. The big difference between lending in residential and in commercial is, in residential, you qualify. In commercial, the property qualifies. And there are completely different ways of analyzing whether you're qualifying or not. And so just keep that in mind when you're looking at switching over. Maybe you've got 1 to 4 units, right? You've been doing residential. If you're going to switch over into multifamily, just understand that the big key to remember is, it's not about you, it's about the property. It's really not about you, which can be amazing, right? Like if you don't have the income, or if you don't have the credit, or there's a lot of things that we really, really need in residential that we don't need necessarily in commercial, right? That's true, correct?
That is absolutely correct. So in your example of, you guys buying a house and the fact that you only qualify for about the same as you did, over the last 20 years or whatever,
Right.
that doesn't necessarily hold true in multifamily. So I have plenty of real estate investors who cannot get a home loan that can go get a $5 million apartment loan. So,
Isn't that amazing?
Yeah, it's crazy. Yeah.
I like to say we use common sense, but that's just my opinion.
Yeah. And it's also interesting how we define common sense, but yes, it's a business loan. So you don't have to qualify, your business has to qualify. So I love that. Let's talk about how to maximize your ROI. Either one of you can pick this one up.
So that is one of the things I think is so important when you're buying a property is when you're looking at properties. For example, some people might say LoopNet's the worst place to find apartment buildings. I've heard that so many times. I found some of my best deals on LoopNet. And why is that? Because I can look at a building and see the income potential that other people didn't see. So I get it. I get deals because of that. So when you're looking at properties to invest in, you want to look at other ways that you can increase the ROI, because the beauty of multifamily too is that the higher your NOI, your net operating income, the higher the value of your property. So we value properties based on cap rate. So if you can increase the NOI, multiply that by the cap rate, then you've already got exponentially higher value. So I look at other things, when I walk into a building, I not only look at, hey, does this building have RUBS, utility billing? If the landlord's paying all utilities or paying some utilities, can I come in and charge the tenants for their utilities to offset that cost? A lot of buildings are doing that nowadays. Is there storage? Is there parking? Are there other ways that I can increase? In California, we have ADUs, which not every state may have. We have you can add an accessory dwelling unit. So is there potential for me to add some ADUs or granny flats, whatever you want to call it, on the property? If I make small improvements to the property, can I increase rents? Does that make sense? And then also I take a look at expenses. How can I cut expenses? Sometimes I go in and, energy costs are astronomical. Well, they haven't converted to LED. The trash bill might be high. You can go renegotiate. There's a couple different trash providers. You can negotiate the price down. There's so many ways to increase your NOI on a property. So you really have to be like a forensic investigator when you go in and look at a property to see how you can maximize its potential.
I love that. And ladies, as you're listening to this, there's a lot of terms thrown out there, right? That can be a little intimidating. Just understand that that's why you need a pro, right? When you're looking at your financing, when you're starting this journey, talk to somebody like Krystle. She'll explain all those numbers and help you to explain the way that the lending works around this so that you can understand it. And then once you've talked to a pro, now you know what to go out and look for, right?
Yes. And one thing I would say that has been really helpful for us in our business and also with other clients is when you're looking at somebody to work with, it would be helpful that that person is also a real estate investor.
Thank you.
Because they understand, they're looking at the property as if they owned it. They know things that someone who has never invested in real estate would never know because they've never been there. So it's really helpful when you're looking at somebody to work with, that you go to somebody like that, because we can be more of an advisor. So I'm not just going to come out and throw out loan options for you. I'm going to say, hey, what if we can do this? Maybe we can increase rents during escrow to push loan dollars. Maybe I can get this insurance quote down. I'm doing everything I can to get to maximize your loan or get you the loan that you want. And that's the kind of person you want on your team.
Yeah. And that's actually going to be true whether you're buying a single family or you're buying a multifamily or you're buying commercial, like offices, retail, whatever, right? Anybody that you use, and I say this a million times on my show, anybody that you have on your team should be investors themselves, because if they're not walking the walk, they don't understand your pain points. They don't understand your pain points. They don't really understand the opportunities. So that's really, really, really good point. Kenny, did you want to add anything?
Yeah, I mean, I think some of the obvious things are for ROI is, you go into a dilapidated unit, you go put your cabinets, flooring, countertops, all that. Obviously, that's a way to generate higher rent. That's going to increase value of the property. The other things here in California that are huge, Do you have parking? I know it sounds weird. Do you have a garage? Do you have access to a storage? We actually try to put laundry in units, instead of a laundry room, because people actually pay $100, $150 more for a garage, $150 more for laundry in the unit. We also will put AC, in-wall AC unit in, because people pay more money. So as you get further along in the journey, and obviously we had the privilege of managing a lot of units, so we learned a lot. We tested it. We'd say, let's remodel this unit, do all this fancy stuff. And what do we get? And what do we keep this one kind of plain Jane over here? And we realize you're getting a lot more money. It was worth it long term. And when you sell the building, somebody's going to pay you a premium. So I think when you're doing the ROI, it's what are you doing for the short term for the rent gain, but also what is a potential buyer if you are going to sell that property, exchange up to something bigger, are they going to pay you a premium? We found there's a lot of buyers, especially here in California, that might be in a different part of their life and age, where they're kind of like, you know what, we own this property. It's got a lot of issues. We don't want to deal with it. We have it free and clear. We want to sell it. And we want to go buy something that has market rents, completely rehabbed, completely done. And we will pay a premium for that. So there's many reasons why you would increase the NOI and fix up the building, not just for the cash flow, but it could be if you're going to sell it and exchange out of the building.
Or even refinance too. So
right. Yeah.
That's another key.
This is a very intuitive thing, ladies, to think about. When you walk into a house, if you look at it and you go, oh, well, it really needs air conditioning, or wow, this fridge is really old, or this doesn't look very nice, but it's kind of livable. And then you walk into a comparable property that's like got air conditioning. It looks really, really nice. It's definitely like a home for you and your family. Would you pay a little bit more? And it may not be dollar to dollar, but there's this intuitive sense of, oh, I'd much rather live here. You want to, and this is how I run my business too. I want to make sure that people walk into the house and just go, like have it like a sigh of relief, right? Like, oh, I could live here. Oh, this is so nice. Or this is so much nicer than these other places. Look, I can do laundry inside, right? Look, I can park my cars without getting sap all over them, right? Now I don't have to pile the kids into the car and run to the car wash every week because my car, whatever it is, right? There's these just kind of these intuitive feelings that we have in our gut when we're moving into a home, and it's taking care of those pieces that may not necessarily be a direct relation dollar for dollar, but you will notice it's so much easier to rent, so much easier to sell, so much easier to maintain if you're doing those things, right?
And not to mention too, retention. So that's one of the things that we found when we put laundry in a unit, you put AC in a unit, people stay longer. So that reduces your turnover cost, that reduces your vacancy. And that's really our goal. We want you to stay there. Get cozy and stay there.
That's right. And most of my tenants stay between 10 to 12 years for exactly that reason, because they love the property. They don't want to have to move to someplace else that's not as cozy. Right.
Yeah, absolutely.
So yeah, I'm really proud of my tenants. They usually buy something. Like once they've lived at a really happy home, they'll usually go and buy something, which that's
awesome.
I love that, right? Because it encourages them. Now they understand what it feels like to live in a place that feels like home, right?
Yeah, absolutely.
So yeah, let's talk about inflation. Everybody's talking about this.
What are you talking about?
I know. What are you talking about, Moneeka? And, there's a lot of fear around this, and I just want to say, yeah, I can understand the fear, but we've had inflation before. Real estate investors still have done really, really, really well. So it's something to be very aware of. It's something to consider. It's something that you can use to your benefit, right? It's not a time to sit on the sidelines and go, oh my goodness, it's inflation. We're not going to touch real estate. So I'd like to get both of your guys' perspective on that, both in residential and in commercial.
Frankly, I would actually advise in high inflationary environments that you should be running to real estate.
I am so with you on that.
Yeah. I mean, I think most of us want to feel this safety that we have all this cash in the bank, but the truth of the matter is that the higher the inflation, the less your dollar is actually worth. So you're losing money by keeping money in the bank. Now, that's not to say that you shouldn't be able to pay for your expenses for, 6 to 12 months, whether it's in your business or your personal life. Absolutely. You need to be able to cover your costs for a period of time. And in terms of like the fear of inflation, I get that, but I think the best thing to do in a market like this is to understand that there are things that you can't control. And while you need to be aware of them, you should not make decisions based on fear. You need to make decisions based on getting the knowledge, understanding where you're at, understanding that you can't change it, but that you can have some control in your personal life about growing your wealth, making smart financial decisions, changing some habits. So it's more like, let's get an action plan together rather than let's be scared and be paralyzed, because this is the problem. Most people freeze because they're scared. And that's the worst thing you could do in an environment like this. The most successful people take action.
I love that. How about you, Kenny? What do you think?
Yeah, I mean, I think for residential, because it's people are buying their home, their costs, their bills have gone up, right? If you bought a home now, the rate's high. We're in the camp that rates will come back down in the future. So a lot of people, 2020 and 2021, we saw all-time crazy low rates. We saw inventory at all-time lows. We saw buyer demand crazy, and that resulted in basically crazy inflation on real estate, right? Price, people are overpaying, all this stuff. So now we come 2022, demand is going down, supply is coming up. Sellers are, some are selling for different reasons, but now the buyer's going, what should I do here? And so I tell everybody, look, we've already seen price reductions. Some, things are coming down, cooling off. And so people are sitting here. I think, people that are listening and, you hear this over and over, and this is the story we're having. Should I buy now? Should I wait? And so I tell people there's probably a window from today until basically when the Fed says we're going to do QE again, which is quantitative easing, which basically means they're going to put money back into the system. Now they're just taking it out at a rapid rate. So it's kind of like if you look at the ocean, we're now getting a really high tide, like it's a high tide. It's a low tide. They're pulling money out, the water's draining out, and they're going to flood the system back. So when that happens, interest rates will drop, demand will go up. People feel like more confident, but that's also when everybody decides I'm going to get off the fence and buy. So I think between today and whenever QE is, if we knew, we'd write a book, this is what it is, and we wouldn't be here, right? And this is the time to buy. So what I would encourage people is look at inflation is now in your advantage. If rates are really high and you think, okay, I've done my homework, there's plenty of YouTube videos, there's plenty of podcasts, plenty of stuff to study that interest rates go up and they're going to lower the interest rates. Even if I lock in a high interest rate, but I get a deal on a house. So let's just pick a house. $500,000 house last year was selling for $550,000. The $500,000 house that's listed today is getting an offer at maybe $500,000, but they're asking for a $15,000 lender credit. That is a huge difference what was happening today and yesterday. So if you're seeing that is, you are getting a discounted house. So if you have a higher rate, yeah, it might not feel good, but if you can be in the camp where you're refinancing in a year and you're getting a lower rate and you're not in the camp where everybody else is, now you have to buy and you're amongst all these people, this whole wave of people that are going to come in. I just think now's the time to do it. So inflation is definitely fearful for most because they don't understand it. And like Krystle mentioned, putting your money in the bank is basically when they're paying you 2% and inflation, as they say, is 8.5%. We really know is more than that. You're really just, you're getting crushed. So I think you might see a dip in real estate for now because of inflation, because of rates that is really being manipulated up. And I think in the long term, you're going to wish you look back, this is an opportunity to buy.
Yeah. I loved your analogy of the ocean and the tides, because that really is how real estate is. There's low tide and high tide, sellers markets, buyers markets. And it has been that way since the beginning of time. So to really understand that what's happening today is not permanent, you're not married to the system, right? The system is going to change and you get to pivot and adjust based on what's possible, right? But what's also true is that even though interest rates are high, rents are raising higher. So interest rates are now going up. They've gone up, 2% in the last 6 months. I think that's too high.
For sure.
But anyways, they've gone up quite a lot. But what have rents gone up? Rents have gone up 30%.
Yeah.
Right. So even if you buy a place and you're paying more, you're getting significantly more in rents. So inflation is playing on your side. So yes, you can be afraid of interest rates. You're also losing a huge amount of money and the appreciation. So the market's cooling down. We might see some sort of correction, but over time, if you guys can see me on YouTube or whatever, but the way that the real estate markets, again, it's market specific. This is not true everywhere, but in general, you have a correction and then it goes up higher. You have a correction, it goes up higher, right? So over time, the general curve of real estate goes up. Now in 2008, 2009, we saw something weird. It was a complete crash. Still, many markets are significantly higher than they were before that crash. So if you're really, really looking at real estate as a long game, what rates are doing today is going to influence inflation. Inflation influences rents, which influences your cash flow. Over time, appreciation is a steady growth. So there are different strategies in different markets, but I can't say don't invest in real estate right now. You have a really, really good opportunity to benefit from inflation by investing. Would you guys agree?
Yes. And not to mention that you talked about buyers markets and sellers markets. It's shifted to a buyer's market now. So you don't have to go out and put an offer in on a property, non-contingent, money hard, day one anymore. Now you can ask for your proper due diligence timelines. You can get your financing contingency and your appraisal contingency because it's not a seller's market anymore.
And it's not as stressful.
Yes, it's a much safer time, especially if you're new to investing, to actually get that time to do your due diligence. Whereas before it was like this extreme pressure situation. You're competing with all of these people. Nothing makes any sense. You just want to win, And so now you get a lot more time to do your due diligence and do your research and make sure that you're making the right decision when you're making offers.
Yeah. And one other thing I really want to mention, that's such a good point, because it's so much less stressful, right? You're not like scrambling constantly, but also your taxes are based on your purchase price. So if last year you bought something for $550, you now, as long as you own that property, are going to have increases every single year based on a property value that started at $550. If you buy it now and it's at $500, even if you're paying a higher interest rate, you're paying less in taxes. It could balance it out, right? And those taxes, you get exemptions on your tax returns too, right? So the way that the numbers work, it's all a numbers game. And just look, instead of like running away in fear, take a look at the way that the numbers are working out. You may be pleasantly surprised at what the opportunities are. I think you will. If you really take a look, you will be pleasantly surprised with what's going on now.
Well, and this is the thing, I've seen this so many times, even with clients who are experienced real estate investors, like every time they close a property, they go, oh, I don't know. I don't think it was a very good deal. Krystle, I think I overpaid. Right. Of course you feel that way. You just paid the market price for the property that you bought. Right. Let's talk in 3 years and tell me how you feel. And so with the property management, I did budgeting all the time for our clients. So every year I would have this budget. And then at the end of the year, I would actually look at it and calculate what their actual returns were on their properties. And so, year one, they'd be like, yeah, it's all right. Year two, okay, fine. It's a little better. Year three, they're like, this is great. Wow. And I guess I actually made a good decision.
Yeah.
So everything feels expensive day one because you are paying market price. Sometimes you're going to get a home run, but you can't count on a home run every time. So if you pay a market rate for a deal today, in 5 years from now, 3 years from now, you will look back and be happy that you did. Even in the financial crash of 2008, our apartment values didn't go down, for us at least. There was definitely some pain in a lot of parts of the country, higher vacancy, management companies going bust, mismanaging properties and things like that. So you're going to have to watch those things. But if you can hold on and responsibly manage your real estate, you're going to win in the end.
Yeah. I love that. You guys, I feel like I could talk to you forever, and we're getting to where we don't have time. So I want to make sure that we complete the show, and then we'll talk some more in extra. In extra, ladies, we are going to talk about hacks to get your first deal at both. And we've got two people. We've got commercial, we've got real residential. So both of them are going to weigh in on that. So I'm super excited about talking about that in extra. But before we move towards the end of the show, you guys, could you tell us a little bit about how people can get in touch with you? And I know you've got a free offering for my ladies, which I'm really excited about.
Yes, absolutely. So we are almost done with a course on how to buy multifamily properties. It's called the Real Estate Hustle course. So we're going to offer the first 10 people who DM us to Get in the Cash Flow Game. That's on Instagram. So it's just at Get in the Cash Flow Game. We'll offer the first 10 people free beta to the program, the access to the program. And it will be a subscription-based program. People who come into it are going to pay a monthly fee. So we'll give your first 10 listeners free access for a year.
Oh my God, that is so generous. And so DM is direct message, ladies.
Yes.
It's a DM on Instagram and it's Get in the Cash Flow Game. We've got so many ladies. I actually did a poll. I was like, what kind of social media are you on? And they're all like, I'm not on social media. Okay. So that's what that means. But anyway, so yes, thank you so much. That was a very, very generous offer. I love that.
Thank you.
Are you guys ready for our 3 rapid fire questions? I'm going to ask each of you separately. Okay.
Let's go.
All right. Who wants to go first?
I'll go first. Krystle wants me to go first. I'll be the guinea pig.
Sounds good, Kenny. So tell us one super tip on getting started in real estate investing.
One super tip in getting started is listen to podcasts like this. We live in a day and age where you can go on YouTube, you can go on Apple, you can go on anywhere and find so much great content. It's like unbelievable. So that is where you should start and swallow and absorb as much content as you can.
I love that. And then what is one strategy on being successful as a real estate investor?
Stick to your discipline. So know your numbers, and know what you want to buy. And don't start wavering on that and making bad decisions. So stick with what you set out to do, and don't start doing crazy things and getting out of your comfort zone just to do a deal, because they could come back to bite you in the butt.
I love that, Kenny. And what would you say is one daily practice you do that contributes to your personal success?
I am a early riser. So very, very early. I get up probably between 3:30 and 4 a.m.
Oh.
And so, yep. I know.
Ouch.
I know. So I'm not saying recommend that, but I would tell anybody is whatever you get up now, maybe get up an hour extra and take that time. And I call it me time. So if I have 2 kids, so if you're a single mom, you're a mom, whatever, you're listening to this, tell your husband, hey, you're going to watch him, but go spend an hour on making yourself better, whether that's learning about real estate or meditating or going for a walk. But that hour extra added up over 1 year, over 20, 30 years, I guarantee you will change your life.
Interesting. I love that. Okay. Thank you for that, Kenny.
Sure.
Krystle, are you ready?
Yes, absolutely. He had some really good answers. So let's see if I can come up with something original.
I'm sure you can.
I promise you I won't be telling people to get up at 3:30 in the morning.
Okay, good. That was just painful to listen to.
I'm tired thinking about it.
But it's true. Each of us is different. We're all built differently. Again, when we talk about who are you, when you're picking your strategies, when you're picking how to run your life, be very, very aware of who you are. That works for Kenny, right? It wouldn't work for me, but it works for Kenny. So,
Absolutely.
And if it works for you, that's awesome, right? So no judgment at all.
No worries.
Okay, Krystle. So tell us one super tip on getting started investing in real estate.
Honestly, the super tip is really to just get started. So first you want to know your criteria, because you're not going to go anywhere without knowing your criteria and your goals. So once you identify that, you really just, like we say, get off the sidelines and get in the game, because you're going to keep analyzing over and over. If you don't get started, you'll just keep analyzing and you'll never do anything. So know your criteria, know your goals, and just move.
Okay. I love that. And then what is a strategy on being successful in real estate investing?
My strategy on being successful is that I'm constantly growing and learning. I mean, I not only listen to podcasts and YouTube and things, if you have the benefit of investing in yourself, that is one of the best investments that you can make. I had a very hard time with that over the years. I would invest in real estate any day, but then investing in myself for like marketing or, courses that just seemed silly, which now I know that's silly. So I have a mentor. I am in coaching groups. Kenny is part of mastermind groups. We are investing in ourselves and growing our knowledge and being better every day. And that is how we're able to be more successful every day, more successful than yesterday.
I love that. And then what would you say, Krystle, is a daily practice that you do that contributes to your personal success?
A daily practice, I think, for me, we just I keep up with the news. It kind of goes along with like all of the podcasts and things. I don't turn on the news in the morning. But what I do is I look at things on my phone. I listen to people that I respect in the industry, whether it's economists or real estate investors, people. I'm always trying to stay up to date with the newest strategies. Who are the newest lenders? Maybe there's newer types of loans available. Maybe there's other things that I can do to improve my portfolio. For example, if we're looking at doing solar in common areas to increase cash flow, like all these little things that I'm looking at to do to better my investing, but also just me as a person. I focus on that. I don't listen to the noise of the media, but I do look at people that I know and respect and people who are where I want to be. And I look at what they're doing.
I love that last point. I love all of it, but that last point of looking at people who are where you want to be. Don't listen to the people who are not, right? It's really, really important to stay focused on the people that are where you want to be. They're going to help you to get there faster. So I absolutely love that.
Absolutely.
You guys, this show has been amazing, and I'm so excited about what we're going to be doing in Extra. So thank you so much for what you've contributed so far.
Thanks so
Thank
much
you
for having
guys.
us.
It's been so fun.
Yeah. And ladies, we're going to be talking in Extra about hacks on how to get your first deal. So if you're subscribed to Extra, please stay tuned. There's more. If you're not, but would like to be, go to realestateinvestingforwomenextra.com. You get the first 7 days for free. So check that out. For those of you that are leaving us now, thank you so much for joining Kenny, Krystle, and I for this portion of the show. You know how much I appreciate you, and I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you soon. Bye.
I hope you enjoyed today's show. If you'd like to find out more about how to become a blissful millionaire, go to blissfulinvestor.com. See you next time.